Hello and welcome to another update video about ADA. It's good to see, actually it's great to see that it did recover so well from our target area. And it was actually quite a small target area and we reached it twice and it got rejected twice. So for anybody who entered here, fantastic, because you are now in profit. You're actually quite considerably in profit, especially if you consider just intraday, because that happened just like 24 hours ago. So anybody who entered here in this support entry area, you are now probably like 4% in profit. That enables you to move up your stop loss, and you don't even need to move it up a lot. Yeah, you can see you really need to move it up only a tiny bit to be in break even, and I would encourage you to do that because especially with CPI, there is a lot of uncertainty going on. So, but that's entirely up to you what you do with your stop loss. I'm just saying this was a successful setup, a successful trade. Congratulations. Now, is it over? Is this move down over? Talked about it in the previous video that here we had a possible ABC structure. The C wave is an impulse. The C wave can be counted as complete. Does it mean it needs to be complete? Absolutely not. We could theoretically still be in some kind of an extension of the fourth wave. Even though here for ADA, it to me looks more likely that we've already started the next wave up. Now, the next wave up could be, as explained, either be a third wave, which would be ending somewhere up there above 50 cents. Looking at the context, we could say this was a wave 1. This here was a wave 2, even though very shallow, and we're now rallying in a third wave to the upside. That would be one scenario. Or, yes, this was a wave 1, but then this was only the A wave, basically the first wave of the larger wave 2 correction. We're now going to move up in a B wave and would then come down in C. They are both very possible. We need to see how this structure now develops. And then it doesn't really matter which one it is at this stage, because we won't know until later anyway. But the whole point is that you trade those pivot points, you trade those decision points, you don't trade the count. Now we've got two possible counts here. One count that we are rallying in a third wave, the other one that we are starting in a B wave. If this correction is over already, yeah, which I also can't guarantee, but that's why we want to trade those pivot points where we most likely see a reaction. We saw that reaction and we now start to move up. Now, we can count it bullish now. I mean, here we have a possible impulse actually as a reaction to the touch of that target area. A 1, a 2, and we could now be in a third wave. Then there should be a fourth and a fifth. That's how it ideally should play out. Let me change the color. And then we can distinguish it from the other numbers here. But yeah, 1, 2. And what should be the ideal target for the third wave now? Let's zoom in. I need to grab the lowest point, the beginning of the orange wave 1. And we measure the wave 1 length. We go to the low of the wave 2. And here you can see very clearly how the wave 2 was a very, very clear 3-wave structure. The wave 5 on a lower time frame is in 5 waves. So we can look at the next target. That would be the 1.618 extension at 37.9 cents. Then we should get a fourth and a fifth afterwards. So 5 waves up would be a first signal, a first significant signal that the trend has shifted. What would be another signal? Another signal would actually be to break out of this impulsive channel. You can draw an impulsive channel by connecting the waves 2 and 4 actually. It's not very well defined, but in Elliott wave you can connect the waves 2 and 4, and if you break above it, it indicates that it's a good indication that the move down, the impulse to the downside, is actually complete. So be aware of that. Yeah, I'm going to leave it on the chart while I take out some of the other lines that we don't really need anymore. I'm going to take that out as well here. See, we don't need these anymore. I'll try to keep the chart clean. Don't need that dotted line, don't need that dotted line. And that's sort of what we're looking for now. To break out of this channel to the upside would be an additional confirmation that the trend to the downside has finished, and to the upside we'd be looking at this target that I just mentioned for the wave 3. Let's just put it on the chart again. And then we can say against the last low of 34.5 cents, we can now carefully look at higher. Does it mean you should enter now? Now that's entirely up to you, but the trade setup was down here. Yeah, this was the low risk, high reward setup, and anybody who entered here has a chance now to bring the stop loss at least to break even if the setup or the trade does not materialize further as an impulse. Yeah, that's the whole point. Because you will only be able to confirm the wave count after the actual wave happened. But that's not the whole point. You don't trade the count, you trade the pivots, you trade the decision points. Okay, so here we are looking now at the 1.618 extension. Yeah, 37.8, 37.9 cents for the wave 3. Okay, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.